Imagine working all month. You get paid, but part of your money disappears. Where did it go? You check your phone. Your salary looks smaller. You feel confused. This happens to millions of people. That missing money is called taxes. It is taken before you touch it. You don't get to say no. The government collects taxes. They say it helps run the country. Roads, schools, safety. Some taxes come from your job. This is income tax. It takes money when you earn. Other taxes come when you buy things. Food, clothes, phones. This is sales tax. There are also taxes on money you grow, like stocks or investments. These are called gains. Every paycheck has more cuts. Social Security, Medicare. Social Security is forced saving. You give money now. You get it back when you are old. Medicare helps older people with health care. You pay even if you are young. That's the rule. Filing taxes feels strange. The government knows the numbers, but you must guess them. If you guess right, all is fine. If you guess wrong, there is trouble. Stress follows. Some people pay monthly, some yearly. Some avoid it and regret it. Taxes are not always bad. Countries with higher taxes often have better services. Now, let's talk about banks. You trust them with your money. But they don't just keep it. When you deposit money, the bank uses it. It lends it to others. Your money buys homes, cars, businesses. While you sleep, this system keeps only a little cash. It expects people not to panic. Most of the time, it works. Banks earn from interest. They pay you less. They charge borrowers more. Your savings help others borrow. Banks sit in the middle. They control the flow. Money in banks feels safe because the government promises it up to a limit. Now, think about interest. It is the price of borrowing money. Like rent, borrow money, and interest hurts. Save or invest, and interest helps. Same tool, different side. Simple interest grows slowly. Compound interest grows faster. It grows on itself. Debt grows fast when unpaid. Wealth grows fast when invested. Time decides the winner. Now inflation. Prices rise. Money buys less. Your money still looks the same, but it feels weaker. That is inflation. Too much money causes inflation. Too few goods raise prices. Balance is broken. Sometimes shortages cause it. Sometimes fear does. Prices react to emotion. Small inflation is normal. Too much destroys savings. People feel poorer. Governments raise interest rates. Borrowing becomes harder. Spending slows. This is how control works. Money moves quietly. Rules shape your life. Now think about small businesses. Most start with big dreams, but dreams alone are not enough. A person opens a shop. They feel proud. They feel hopeful. The first problem is money. Starting costs are high. Rent, tools, supplies. Many borrow money to start. Loans feel helpful at first. Later, they feel heavy. Every month, payments are due. Even if sales are low, debt does not wait. Many owners forget planning. They focus only on selling. They ignore numbers. Money comes in slowly. Bills come in fast. Stress. Big taxes surprise new owners. They forget to save for them. A big shock arrives. Employees cost more than salary. Insurance, taxes, time. It adds up. Some hire too early. Some hire family. Mistakes are common. Prices are hard to set. Too high scares customers. Too low kills profit. Many copy competitors. They do not stand out. Customers forget them. Marketing is confusing. Ads cost money. Results feel slow. Social media looks easy. but consistency is hard. Most give up early. Cash flow is the real problem. Not profit on paper, but money today. A good month feels amazing. A bad month feels scary. Business is emotional. Owners work long hours. Days blend into nights. Burnout starts. Family time disappears. Health gets ignored. Energy drops. Some owners do everything alone. They trust no one. Growth stops. Systems are missing. Everything depends on one person. That is risky. When the owner is sick, the business slows. Sometimes it stops. Big companies have teams. Small ones have pressure. The fight feels unfair. Rules change often. New laws. New fees. Owners must adapt fast. Banks prefer big businesses. Small ones get higher rates, less help. One mistake can be fatal. A bad deal. A bad hire. Many ignore customer feedback. They think they know best. Customers leave. Trends change quickly. Businesses move slowly. They fall behind. Online competition grows daily. Local shops feel pressure. Margins shrink. Some owners fear change. They stick to old ways. Sales decline. Others chase every new idea. Focus disappears. Money drains. No savings means no safety. One emergency hits hard. Closure follows. Many businesses fail quietly. No news. No drama. Just closed doors. Failure feels personal, but it is often structural. The system is tough. Success needs planning, patience, and learning. Strong businesses watch numbers daily. Not just sales, but costs. They build systems early. Processes replace stress. Work becomes smoother. They save for taxes. They expect slow months. They prepare. They listen to customers. They adjust quickly. They improve. They know marketing takes time. Trust grows slowly. Results follow later. They focus on one thing. Tato, eat well. They grow step by step. They protect their health. Rest matters. Clarity matters. They ask for help. Mentors, accountants. Guidance saves money. They understand cash flow. Money timing matters. Survival depends on it. They respect competition. They learn from it. They adapt. They do not chase fast success. They build slowly, but stronger. The system is hard, but not impossible. Knowledge changes outcomes. Most failures come from surprise. Prepared minds survive. Others struggle. Small businesses are brave. They create jobs. They create hope. But bravery needs structure. Dreams need plans. Plans need discipline. Money rewards patience. Punishes shortcuts. Time tells the truth. The system does not care about effort. Only results. That is reality. Understanding the rules helps. Ignoring them hurts. Learning is power. Every failed business teaches lessons. Smart people listen. Others repeat mistakes. Success looks slow at first, then it compounds. Just like interest. Most quit too early. Right before progress, that is common. Those who stay learn faster, adjust quicker, survive longer. Small wins build confidence. Confidence builds growth. Growth builds stability. The system favors preparation, not luck, not hope. Understanding money is survival, not luxury, not optional. Business is a long game. Short thinking fails. Long thinking wins. Every number tells a story. Good owners listen. Bad ones ignore. Failure is not shameful. Refusing to learn is. That matters. The system is tough by design. Only the informed last, others exit. Knowledge changes outcomes. Planning changes futures. Action changes lives. Small businesses can succeed, but not blindly, not emotionally. They must think clearly, move carefully, grow patiently. Money follows structure. Freedom follows discipline. This is the truth. Now you know the real reason. Why most small businesses fail and how some survive.